Let's move to entertainment. First quarter results for Viacom were mixed, but shares of Viacom are up, and I'm assuming that has to do with a little bit of optimism about their new production deal with Netflix.
Yes, exactly. And low expectations. There might be a whole generation of people who have no idea what Viacom is, right? So, I mean, the industry is changing, and Viacom, it's important for them to stay relevant. So a lot of the ways that they're staying relevant, like you said, Netflix, they had some great hits this year on Netflix, getting licensing revenue from, if I remember correctly, I think some of their TV shows, Haunting of Hill House was very popular, Maniac. I mean, so they're still producing those TV shows, licensing them to companies like Netflix. But the core of their business is still kind of a lucrative part for them is still charging for cable packages. So it's going to be interesting to see how they change their core business from getting this revenue from monthly subscriptions to maybe being a more content-based or advertiser-based thanks to their acquisition of Pluto TV. So, I mean, these are things that's going to be really interesting to watch to see how Viacom develops in the future, if they end up kind of fading away and turning into a legacy of the past, or if they can make themselves or carve themselves a relevant portion of the streaming service in the future.
Yeah, Viacom is one of those businesses, and we've seen this in other industries as well, where the properties that Viacom owns are almost certainly better known than Viacom itself, because as you said, Viacom, that's one of those things where you sort of scratch your head and like, well, what is that? But people have heard of Nickelodeon, yep, MTV, Comedy Central, BET, Paramount Pictures, so they've got these properties. In the case of the Netflix deal, I think it's a new deal with Nickelodeon. Mm-hmm. So creating some more children's programming for Netflix. I wonder if at any point, in the same way we've seen consumer products conglomerates become more efficient by selling off some of their brands, I wonder if at some point Viacom starts to look at some of their cable systems and saying, okay, we don't really need this channel. This is not really moving the needle for us. Or if there's strength in numbers, and it is, as you said, it is for now still about the bundling.
It'll be interesting to see, because Viacom's kind of treading this line where they have, like you said, all of these kind of like name brand channels, this content, and they can either license it or sell it and use it on an ad-based platform and get licensing or ad revenue from that. Their recent acquisition of Pluto TV is kind of a great example, and it's the free ad-based TV streamer. It doesn't have a lot of great content on it now, but now that it's kind of under the Viacom umbrella, that might change in the future. But if they add too much content to these types of free websites, they're inherently undercutting the value of having a, cable subscription. And so it's going to be important for them to change with the times, but not also dig their own grave in that process.